So a big focus on fuel security, cost of living and housing, but also a reform package in tax, productivity and also making the budget more sustainable.
And the budget must look quite different to what you would have been planning in February before the attack on Iran. You've now announced, as you said, billions of dollars of spending for fuel supplies. What else did you have to change, and what did you have to remove from the budget to get that money and to be able to make those savings?
One of the things I'm proudest of is that we've been able to maintain the effort on economic reform. The productivity package is substantial. The tax reform package also substantial. And the budget has more than the usual amount of budget repair as well, $64 billion in savings in the budget. And so we've been able to focus on the particular pressures and developments coming at us from a war in the Middle East. Obviously those are the new bits, but we've also been able to maintain the pace and maintain the ambition when it comes to economic reform.
Have you been forced to take that stance and to cut spending more than you wanted to because of what happened in Iran with the attack by the US?
We had some inflationary pressures before the war in the Middle East, but the war has made them much more substantial. That's why we will be forecasting an increase in inflation. A bit like the Reserve Bank has been forecasting. So the inflationary challenges are serious. They are a big focus of the budget. $64 billion in gross savings is much more than the usual amount of savings in an Australian budget. We will also be banking every dollar of the upward revision to revenue, but in some years the revision to revenue is down. So all of this means that there's more than the usual amount of pressure on our economy, on our budget. Inflationary pressures, fiscal constraints, we're taking all of that very seriously.
And later this week, President Trump is scheduled to go to Beijing to meet with President Xi. I realise you've got a busy week ahead of you as well, but have you sort of paid any attention to that, and what is your expectation for what might benefit Australia from that meeting?
Australia is not immune from all of the developments and pressures playing out around the world. We're better placed than most of our peers. We're well prepared for what we think will be a long tail, even when the war in the Middle East ends. And so there's more than the usual amount of churn and change in the world right now. We are to some extent hostage to decisions taken in Washington or Beijing or Tehran. But what we can show in this, we demonstrate in this budget, is we've got a lot going for us, even though we've got a lot coming at us from around the world. We monitor all of these developments very closely.
And on productivity, it's now the lowest it's been in decades. And you spoke about the productivity policies that you're going to have coming into the budget, mostly on the tax side. Is that enough to really turn around the story of productivity in Australia, and what more can your government do to help to try and change that?
Well, like a lot of countries, Australia's had a productivity challenge in our economy for decades now, not just the last couple of years, but the last couple of decades. In fact, in our productivity numbers over the last year, we saw productivity at about 1% growth, which is better than the 20-year average, and we saw market productivity up at about 1.5. It's gone up for a number of quarters now. So those are welcome developments, but we don't get carried away with that because we've got this long-standing challenge which has been entrenched in our economy for a long time. And so the productivity package is actually a very, very substantial part of the budget on Tuesday night, not just in tax but in other areas as well. It's all about making Australia a more attractive investment destination, getting compliance costs down, making it easier and faster to build in our economy, whether it be housing or energy projects. Just today we've announced another $2 billion investment in the infrastructure that we need to get 65,000 more homes built, to get projects over the line. A big emphasis on housing in the budget, particularly on supply. And so all of this is about trying to make our economy more productive, more dynamic, recognising we've got a long-standing challenge. We won't fix it overnight, but we can shift the needle over time by acting on a range of fronts simultaneously.
Australian Treasurer Jim Chalmers speaking to Bloomberg's James Mager in Canberra. Now, also over the weekend in Australia, the far-right party One Nation delivered a shock to the country's political landscape, securing a resounding victory in a by-election. Paul Allen joins us now with more. Paul, it looks like another sign of collapsing support for the centre. Give us a sense of the significance of this result.
It might be tempting to say, this is a by-election, so what? But local media is describing this as a political earthquake. The One Nation candidate, David Farley, won a seat of Farrer with 60% of the vote. Now, this is the seat that used to be held by the former Liberal leader, Susan Lee. It's been in coalition hands for 77 years, and now it is gone. The Liberal Party came a distant third, so there's going to be some problems for the Liberal leader, Angus Taylor, going forward. But the One Nation leader, Pauline Hanson, this is the highlight of 3 decades of political life for her. One Nation has very strong anti-immigration policies. At her victory party, she told the people of Farrer, "You are not the forgotten people anymore. We want our country back." And the new MP, David Farley, also criticised immigrants. He said to, quote, "give us nothing."
Paul, what are the potential implications for the next general election?
Yeah, that's not until some time away. It's May 2028, so obviously a lot can happen between then and now. But what we're seeing here mirrors what we've seen in other countries, as you mentioned at the start. I mean, over the weekend, we had those local body elections in the UK where the Reform Party polled extremely well. We have, of course, President Trump and the MAGA movement in the US. So what we're seeing with One Nation to some degree echoes that. One Nation's only other MP in the lower house, they now have 2. Barnaby Joyce, international viewers might remember him as the man that wanted to euthanise Johnny Depp's dogs a few years ago. He's now targeting voters in Western Sydney, which is the working class heartland of Sydney, saying that people feel left behind in their own country. And One Nation in opinion polls is now either close to or is outpolling the Liberal Party as well. So the Liberal Party now under attack from 2 flanks, on the right with anti-immigration policies, and also on the left in the cities from the Teal independents who feel it's too weak on climate. So very, very difficult days for the centre-right movement in Australia at the moment.
Paul, thank you so much for getting us up to speed. Paul Allen in Sydney. Now getting you up to speed as well on what we're seeing in FX, because the Aussie against the Japanese yen has pretty much erased some of those earlier gains. If you look at how Aussie yen has been trending lower, we're pretty much where we were from last Friday at the close, and perhaps this speaks to the sense for markets. It's really still this idea of a risk on, given how also we saw jobs numbers out of the US looking pretty solid, Sherry.
Yeah, and really not surprising that you're getting Aussie yen gaining ground at this point because of the rate differentials issues on the background, right? I mean, we have seen the 3 rate hikes coming from the RBA. On the other hand, you're not really seeing that much signaling coming from the Bank of Japan that they will also go ahead and hike rates, and that's putting pressure on the Japanese yen. One topic that will be discussed by U.S. Treasury Secretary Scott Bessent, who will be here in Japan this week. He's embarking on a high-stakes diplomatic trip throughout Asia this week, in Japan, South Korea, ahead of an expected Trump-Xi meeting in Beijing on Thursday. Let's bring in Bloomberg's Tokyo economy and government reporter Erika Yokoyama for more on this. And Erika, I just mentioned the importance of the currency, perhaps in some of those comments that could come from Secretary Bessent. What else will you be watching?
Exactly. The one key question is whether Bessent will say anything on Japan's macroeconomic policy after meeting Finance Minister Katayama and BOJ Governor Ueda. And the timing is extremely important because it has been only 2 weeks since Japan intervened in the currency market to support the yen after BOJ's stand-pat decision, as well as Fed's more hawkish stance just accelerated the yen slide. You remember back in October, when Bessent visited Tokyo, he urged the Japanese government to ensure some policy space for BOJ, saying that it was necessary for exchange rate stability. So that suggests his preference for Japan to stabilize the currency through BOJ's rate hike rather than direct currency intervention. So if Bessent repeats the similar sort of message this time again, market could see it as a renewed external pressure from him on the BOJ to raise interest rates anytime soon.
Yeah, exactly. So anything that comes out from Secretary Bessent this week will be so important, because you and I have both spoken to Finance Minister Katayama, who's kept saying that the U.S. and Japan are on the same page, that they're constantly communicating. But could we expect this upped pressure if we continue to see the instability in the currency space?
Yeah, exactly. Like the Western has been putting sort of pressures on Japan by using his expertise in Japanese market and policy. Let me just go back to some of the examples recently. Like, for example, since last August, he said in a TV interview that the BOJ was behind the curve, suggesting that the central bank was lagging behind in responding to inflation and market development. And also at the World Economic Forum in Davos in January this year, he also expressed some concerns about Japan's JGB yields hike, saying he was seeing some spillover effects into U.S. Treasury market. And also, he helped in Germany coordinated rate check when both Tokyo and Washington contacted market participants as the yen came under pressure. So he has been putting some pressures on Japan, and every time he makes some comments on Japan that move the market as well. So that could be very well be the case again during the visit this time.
Yeah, and Secretary Bessent is also expected to meet with Prime Minister Takaichi, also Japan's foreign minister. This all ahead, of course, of the China-Trump-Xi summit. A very strong diplomatic signaling.
Yes, correct. I think so because, as you said, Bessent is heading to China and join Trump after this Japan stop. And his meeting with Japanese leaders in that sense could also carry some implications for Japan and China relations. According to some local media report, discussions are expected to include economic security issues such as rare earth supply and energy procurement, Middle East relations, as well as China's export restrictions. So I think Takaichi will try to balance two objectives. So first, Japan wants to ensure that any U.S.-China new agreements do not leave Tokyo at a disadvantage, especially in trade or economic security. But at the same time, Beijing will be closely watching what we discussed with Bessent in Tokyo. So that means Takaichi will likely to try to avoid sending any confrontational unnecessary message towards China through communication with Bessent.
Bloomberg's Tokyo economy and government reporter Erika Yokoyama there with a preview of what to expect from Secretary Bessent's visit to Japan. Coming up, why our next guest is warning that Japan's K-shaped economy is becoming more pronounced. CLSA's head of Asia Consumer Research, Oliver Matthew, joins us with his outlook. This is Bloomberg.
Season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal. Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount, Skydance.
Morgan Stanley, another monster quarter.
And those still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anna reporter in Caracas, Venezuela, and this is Bloomberg.
Japanese bank earnings are in focus this week. Bloomberg Intelligence says Mitsubishi UFJ, Mizuho, and Sumitomo Mitsui will have earnings upside from potential policy rate hikes over the next 9 to 12 months. They also expect Nippon Yusen's fiscal 2026 earnings to be supported by its energy segment as the conflict in the Middle East drives up spot rates for oil tankers. SoftBank could be issuing a solid earnings forecast as price rises in its mobile businesses. This comes as upsides from the AI data center boom are seen brightening the telco's outlook. Traders will also be watching Nissan earnings after the carmaker said it averted an annual operating loss following the removal of U.S. emissions-related charges and favorable currency movements. Meanwhile, Honda was set to post its first net loss since it began reporting consolidated earnings in 1977. This is due to a $15.9 billion charge after it decided to cancel launches of some EV models planned for North America. Let's bring in our next guest, who says Japan's consumption is still quite challenged with the country in a K-shaped economy. Joining us in the studios, Alfred Matthew, head of Asia Consumer at CLSA. Good to see you again. So we have seen these new superlatives in the Japanese equity markets, record highs, record highs. Everything seems to be going very well when it comes to the markets, when it comes to financial assets. Is that what we're seeing also being reflected in the broader economy?
Well, the reason assets go up is the risk-free rate is low because the Bank of Japan has kept interest rates low. That leads to a very weak yen, which has brought in a lot of inflation, which means prices are going up for consumers, and that is painful for them. So actually, real wages have been down pretty badly for the last few years. Last 3 months,
the last 3 months we've been seeing the positive in the real wage numbers. It takes a long
time to convince people after many years of corporates also. They want to raise prices. They need to deliver higher profitability. So they're raising prices. The BOJ is bringing in imported prices. The consumer is stuck in between, and it's been very painful. We're just reaching the point where wages have overtaken inflation, but it's not quite enough for most people to say, all right, it's Golden Week, I'm going to Hawaii. They are not saying that. They're saying, oops, how am I going to afford, my food for the next month or so? I'm looking very closely at my household budget.
Are they at least traveling domestically? Are they spending within the country? Okay, the Japanese yen is cheap and you can't go overseas, but what about spending inside the country?
Yes, but discretionary spending, I think, is still under a lot of pressure, whether that is going to Disneyland or going on holiday. You're still worried with looking at the news and Iran and all oil prices going up. Am I going to save or am I going to spend? And right now, I think people are still likely to say, I need to save more money.
Does that translate into broader economic slump? Because I just recently saw a note from Goldman Sachs that was saying perhaps consumption in Japan is more insulated because you have more elderly people. They don't necessarily change their pattern of behavior and purchases.
Maybe, but on the other hand, they're mostly on fixed income and the cost of everything is going up. So when their pension comes through, it won't last so long. So they are under stress. The one thing which is good is property prices has gone up. So a lot of people do own property here, so they're feeling like, oh, my DCF of my main asset is actually positive. So that gives some kind of wealth effect. But on the flip side, if you are young, you're now looking at buying an apartment which is 30% more expensive than last year. How are you going to get on that property ladder at 10 or 15 times your salary? That's very challenging.
Which is really interesting because we haven't talked about properties in Japan for decades, haven't we?
Right. And so property has been a good investment. You're starting to see it peak out to some degree. There are some companies which are benefiting from that because also for richer elderly, it's a way to transfer your assets very tax efficiently to the younger generation. So that's one area which has gone up. But looking forward, if the BOJ is going to raise, what's the impact on property? You need to bring down inflation. It might have some impact on those real assets as well.
In the US, for example, consumers are very sensitive to higher gas prices, right? $4.50 per gallon is a huge deal. In Japan, we're hearing about 190 yen per liter of gasoline. That is the highest since the 1990s. Does that translate to paying for the consumer when you have so much public transportation as well?
It will do if it feeds through into logistics costs and things like this. For most people, if you're in a big city, and Japan consumption is driven by the 5 big cities, it's not going to kill you. So it's more about does that feed through into other things. So e-commerce, our price is going to come up because you suddenly have to pay delivery. You're not used to paying for that. I think there will be stresses in the logistics logistics systems over time if oil prices remain high.
And then we started this conversation with the pain from a cheaper yen. At the same time, you're getting more tourists from overseas, right? How much does that help the services sector?
It does help, particularly if you're in hotels, that area, but more broadly, you're seeing some companies that used to benefit, like cosmetics companies, but to some degree they've been raising, so maybe the price gap is not as big as it was. But yeah, generally it's very good for building soft power in Japan. People come here, they buy Uniqlo, they go, wow, this is great, they go back, they can repurchase that in their home markets. So it's a very good thing for certain companies, but it's only those which then have a global footprint which are able to benefit from long-term repeat purchases. So something like a Shiseido, something like a fast retailing, ASICS perhaps, those are companies which benefit longer term, otherwise it's a short-term win for the hotel industry.
So more bifurcation in the economy. Great to have you back, Oliver Matthew, Head of Asia Consumer at CLSA, joining us here in Tokyo. Of course, you can catch Japan Ahead every Monday, 8:40 a.m. If you're watching here from Japan, subscribers can watch live on the terminal using the TV Go function as well. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power, billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every Wednesday at noon Eastern, only on Bloomberg Television. Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Let's get you set up for the trading day following a very powerful handover from Wall Street, really about chips and AI. This is the setup for Monday's session, indicated for 5% higher on the Kospi, of course, tracking the big names Samsung and SK Hynix. Some nuances there, but flip the board as well. We are seeing volatility, interestingly, starting to flow higher in Korea overall, as this term chart shows you. And normally, volatility is higher if the markets drop, but Korea seems to be scrambling for upside as well, and that seems to be feeding into the price of volatility, with retail institutional investors both chasing the rally. And this is what we're seeing, of course, in the setup for what we're seeing on the Monday session. Sherry?
Yeah, interesting. We actually have U.S. retail investors also playing into the South Korean rally. Interactive brokers actually giving them direct access to Korea as well. Take a look at how futures here in Japan are setting up upside of more than 1%. We do have earnings results, so do watch out this week for banks reporting. We also have SoftBank, Nissan, Honda, and of course Nintendo offered a surprisingly downbeat outlook, so do watch out for that stock. A little bit of downside when it comes to Sydney futures, down 0.8%. Of course, we do have a little bit more negative sentiment spreading given the rejection of the Iran proposal for the ceasefire by President Trump as totally unacceptable. The market opens in Sydney and Seoul, and Tokyo are next. This is Bloomberg.
to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly. Welcome to my workplace. Do you feel pressure? Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens on a more cautious footing, as we have now seen President Trump rejecting Iran's latest ceasefire proposal. But April, when it comes to the AI global trade, it continues. We have seen chip makers rally, 11% just last week.
And of course, all this against the backdrop of earnings having delivered on the S&P 500 and the expectation that maybe things are quite contained when it comes to the Iran war, and that can help fuel the positive sentiment on stocks a little further, Sherry.
Yeah, we have plenty of results to watch here in Japan as well, from the likes of banks, and not to mention car makers as well. This, of course, after we already had Nintendo offering a little bit of a disappointing picture when it came to guidance. So do watch out for some of those idiosyncratic results out of the Japanese session today, at a time when we're seeing also the Japanese yen holding at that 156 level, very close to that 157 level against the US dollar, all at a time when Secretary Bessent is also visiting Japan, also South Korea, ahead of the Trump-Xi summit in Beijing later this week. What he says about really policy here in Japan, about the currency, will be key to watch, of course, the Iran war as well. You can see the Nikkei now opening 0.7% higher at the moment. We have seen a little bit of downside pressure in the Friday session, but the focus, of course, remains very firmly on the earnings results that we're getting out of Japan this week, as the JGBs now are holding at that 10-year 250 level. Take a look at how South Korea is coming online, because we're expecting some fireworks from this market. Of course, we have seen the Kospi just rally, 75% or so this year so far. One of the best in the world, together with Taiwan. You can see the pop of almost 4% for the Kospi at the open. A little bit of downside pressure for the Korean won against the US dollar, but all of this to do with, of course, the incredible rally that we're seeing in the semiconductor space. I mentioned the Philadelphia Semiconductor Index gaining for the past 5 sessions, 11% gains. We're watching some labor union negotiations on Samsung, and also we're getting the 10-day export numbers for this month, rising 43.7% year on year. Of course, the tech exports, that strength continues to power this economy, April.
Yeah, Sharon, of course, the tech sector was what powered the US performance on Friday, with the Nasdaq outperformed the S&P 500 clock a fresh record. We are, of course, watching the mid-caps as well. But note how, against the backdrop of these fresh headlines and oil pulling ahead, we are seeing a bit of a read-through from these latest headlines from the US president. Your yield on the 10-year is moving above the 438 handle, having declined a bit on Friday, and this was following on from the payrolls numbers. Of course, the focus this week, as far as macro is concerned, is going to be on US CPI as well, Sherry.
Yeah, despite, of course, the optimism that we're seeing around all the AI trade, our next guest is actually cautious on the tech sector. He prefers to invest adjacently through infrastructure, power, financials as well. Let's bring in Evan David, Managing Director for Global Wealth at OANDA. Really good to have you with us. So tell us a little bit about your caution when it comes to the tech sector. Is it just a matter of valuations, and could we see better margins across Asia?
Yes, and I think we have to define caution. What caution really means is not being too underweight tech, certainly it's staying at weight but not being too overweight, and be very careful to trim when that comes into question. So what we're suggesting is it's not that we think the valuations are particularly stretched right now. We think they certainly have been borne out in earnings, but what we are concerned is of concentration. There is dramatic concentration, not only in US equity markets, but also Asian equity markets, as you can see from the run-up here in semiconductors. So any kind of concentration like that, that's where we start to look to diversify, to take profits. You mentioned the adjacent sectors. We've seen the infrastructure, the so-called picks and shovels trade. I'm also starting to classify financials as an adjacent trade right now. Financials need to provide that finance to the cash-hungry tech sector. They've also been very robust in their own right. And energy, which is a very important source to the infrastructure section, that's an adjacent trade. And energy has also been proving to be a bit of a safety trade amid the geopolitical events we've seen. So all in all, that would suggest a more of a rounded portfolio that is leveraged to the tech story, but is not so concentrated on tech.
And on your notes, I see that you're even long private credit, despite some of the challenges that the sector has seen.
Yes, what we see is that private credit, first of all, it is an opaque sector. We think about it not as a source of liquidity. I think that is the biggest mistake that we've seen in markets today, is investors who have been seeing private credit as something they can tap as a liquid source. We've been extremely cautious on the quarterly liquidity private credit trades. What we have seen is that there is a wide divergence in essentially strength and quality within private credit. Many of the providers are not overly concentrated in software. And even when we use the definition of concentration, if we see a 13% exposure to software, that to me is not particular concentration. I define concentration as some of the Max 7 stocks. They are concentrated. So when it comes to private credit, it's about managed selection, being broad-based across the type of credit you invest in, and seeing it as a decent source of income in a portfolio that is contractual in nature. It is not dependent on market movement.
When it comes to the AI trade, you talk about this concentration risk out of the US. What about China AI trades? They've come off a little bit in the past couple of months. What is your read into that, especially in a week where you're expecting to see the leaders of both China and the US meeting?
It's a great question. When it comes to the China trade, this is where we need to be focusing our research resources right now. There is all the talk on US exceptionalism. There is a doubling down on the US exceptionalism thesis. And we see that this does not seem to get challenged. And therefore, the danger is that we stop researching where the strides are being made outside the US. I believe this is going to be a recipe for a dramatic negative surprise if we do not look around at what China's advances are doing. We already know when it comes to robotics, there are dramatic advances. And equally, when it comes to data centers, building of those, and the dramatic power capabilities, this could easily leapfrog the US if we don't continue to invest in the US itself. So therefore, yes, definitely keeping an eye on this. And how can investors get exposure is through maintaining what we do at Moneta and have done throughout time is have a global equity portfolio, not a US-centric, US exceptional one.
there does seem to be a sense of the Chinese AI trade finding it a bit of a struggle to perhaps sell the narrative. Foreign investors not entirely bought into it. What do you think needs to be resolved for the next leg up?
Yeah, I think investors need to maybe have a little bit of a sense check in terms of the trajectory of USAI. We've seen some great numbers just 10 days ago come out of the top 4 stocks there. Great revenue numbers. That's all now validating the revenue thesis. So there hasn't been that sense check. I think unfortunately it will need a bit of a reality check, maybe some negative news around AI for investors to look elsewhere. That's when we see the rotations happening, is when the weaknesses appear in the traditional thesis. So it will take a little bit more. It will also take maybe a bit of profit taking. They've taken profits in their US names, and then they'll have a bit more dry powder to cast around for more global exposure. So it will also take perhaps, there's a lot of listening to talking heads in the space in terms of whether it's politicians, policymakers, or actual leaders. If we see some words coming out of the company leaders around China and around AI, that I think will be very influential.
Even have we finished pricing in all of the pain coming from tariffs globally now that we're headed towards these talks between President Trump and Xi Jinping?
Yeah, that's a great question. It did seem that tariff risk kind of ebbs and flows. We saw it most recently last week around the European autos and US tariffs on that. I think overall we seem to be now internalizing the belief that tariffs are not inflationary, at least not initially. We know that there is a sense of them coming and going and being quite sudden, and equally that companies have learned to cope with some of the tariff uncertainty. So I'd say the shock factor from tariffs is very much muted from where it was, say, around Liberation Day. We are moving into more potential to be exposed to shocks around other geopolitical developments, not around tariffs. So I'd say, yes, equally, we know that there is high level, on both sides, high level momentum around basically having agreements, and equally, as the midterms approach in the US, we know that there isn't going to be as much appetite for market negative surprise. So I think overall having positive news there and spinning it that way will be essential.
Even good to have you with us, Managing Director for Global Wealth at OANDA. We'll have more ahead on the Asia trade. This is Bloomberg.